Hey, welcome to our first Technical Tuesdays. My name is Carl Eggers, and what we do on this little YouTube video is we basically go through either one chart or a few charts that are sticking out to me and something that I think you could benefit from. The whole goal here is to educate you and to show you some different ideas. Of course, many of you are familiar with our podcasts that we do once a week, our audio podcasts. Our website, eggerscapital.com, is the place you can get a lot of information about us. So we're going to look at a few things today, and these videos are going to be fairly brief, maybe less than 5 minutes. When we've done video podcasts in the past, many have told us that they just don't have the time to sit and watch very long videos. So these are going to be short little snippets. Of course, you can always look at our charts on ETF Charts is our Twitter handle. You can look at those on Twitter. All right, first we're going to start with the Russell 2000. So, of course, the first thing you're going to see with the Russell 2000 is that we were really moving sideways for most of 2017. Kind of had this megaphone pattern here. It broke below the 200-day moving average, which is this red line. So, right in here, this is the 200-day moving average. Of course, I've also got the 50 and the 100 as well, and the 20. So we've got a few different moving averages. But you can see we recently just broke out right here. What we expect to happen in the short term is for that to pull back a little bit. Obviously, the Russell's been on this huge run, primarily due to probably the tax proposal that President Trump's trying to put through. So what you're seeing is people rush into small cap stocks, pretty much because I think they're going to be some of the biggest beneficiaries from this tax proposal. So we've seen a really big run here out of small caps, and what I would expect to see is everything's pretty much stretched. I would expect to see a little pullback, and then this is going to be your support, right where the old breakout was, and then we would look for it to move higher, perhaps into year end. So, of course, right now we're seeing, even on an up day, we're seeing this pullback a little bit, about 0.3% today. So maybe we've started to see a little rotation back out of the IWM. All right, next up we have the EEM, which is the emerging markets. We've been bullish on emerging markets for quite a while, and we're finally starting to get this huge move. Emerging markets, the EEM was up almost 30% just in 2017. And what I want to point you to, and we had a picture of this on our ETF Charts Twitter account the other day, at ETF Charts, is the 50-day moving average. The 50-day moving average right now is this blue line, and you can see it's bounced off here several times, right here, right here, right here, and then we just broke off of it, basically bounced off it the other day, and so I had a chart up saying this was good support. You're getting that bounce now. Emerging markets for the day today up about 1.4%. So are we going to see maybe a rotation out of small caps into emerging markets? And of course, you have this channel that it's been in, so look for it to go to at least the top of that channel right in here, and then we will see if we get another pullback. All right, the last one is KRE. These are the regional banks ETF. And by the way, we will cover stocks occasionally. We'll cover bonds. We'll cover gold. So it's not just ETF and stock ETFs. We will cover a lot of different things on Technical Tuesdays. Make sure you subscribe to the YouTube channel, by the way. So if we look at the regional banks, some of these have been moving up. We believe that this move coincides with the move we saw in small caps because of the tax proposal. We think that has a lot to do with it, and the idea that, number one, the Fed is going to reduce their balance sheet, and so that could mean more selling of bonds. It will mean more selling of bonds, which could mean obviously interest rates going higher. Regional banks and other banks, KBE is the other bank ETF, this is regional banks, they would benefit from higher interest rates. So that's why we've seen that move. And with the Trump tax proposal, again, we think that maybe people are feeling like we're going to have some economic growth, maybe some inflation going forward. So that's why you're seeing this move. But regardless of the reason, this is the picture that I see right here. So basically, I think, again, kind of like small caps, we're at a period right now where we should get a rest and a pause. I would look for some type of retracement, whether it's the 38.2 retracement or maybe even a 50% retracement, somewhere right in here. and then we might be back off to the races if indeed interest rates go higher and if we get some actual tax reform. So those are your 3 ETFs for the day to watch. So again, I would not be buying small caps right here, right now. I would not be buying regional banks right here, right now. I think emerging markets still look good, and they've been out of favor the last month or so, and I think they may be starting to become in favor once again. And as we said, this is our YouTube channel, and don't forget to check out eggerscapital.com. Thanks, guys. We'll see you next Tuesday.